My dear students, welcome back to our channel. In this video, I will be explaining the Bcom 5th semester subject Cost Accounting as prescribed by Osmania University and other universities of Telangana. We will go through the important questions and answers one by one. Let's begin with a quick revision. Unit 4 first important short question is: define variable cost. Variable cost. Variable cost means the cost that changes when the level of production changes. If a company produces more units, the total variable cost increases. If it produces fewer units, the total cost decreases. But the cost per unit usually stays the same. Example: imagine a company making pens. The ink and plastic used to make one pen cost 5 rupees. If the company makes 100 pens, total cost is equal to 100 times 5 rupees is equal to 500 rupees. If it makes 200 pens, total cost is equal to 200 times 5 rupees is equal to 1000 rupees. So, the total cost changes with quantity, but each pen still costs 5 rupee to make. Easy way to remember. More you make, more you spend, less you make, less you spend. In short, variable cost varies directly with output. Examples include direct materials, direct labor, power used in machines, and packaging cost. Next important short question is to explain about allocation and apportionment of overheads. Allocation and apportionment of overheads. In cost accounting, overheads are the indirect costs like rent, electricity, supervisor salary, etc., which are not directly linked to one product. To find the real cost of each product or department, we must divide these overheads properly. This is where allocation and apportionment come in. Allocation. It means giving the whole cost to one department that clearly used it. Example: salary of factory manager of department A is equal to 10,000 rupees. This full amount goes only to department A. Apportionment. It means dividing a common cost among different departments on some logical basis. Example: factory rent 30,000 rupees divided among 3 departments based on floor area used. Easy tip to remember. Allocate when it belongs, apportion when it's shared. In short, allocation is equal to direct sharing of overheads. Apportionment is equal to fair division of common overheads. Next important short question is 3. Prepare a cost sheet showing factory cost from the following. Purchase of direct materials 60,000 rupees. Opening stock 10,000 rupees. Closing stock 15,000 rupees. Carriage out wards 16,000 rupees. Direct wages 20,000 rupees. Indirect factory expenses 50% on direct wages. Cost sheet showing factory cost. Let's prepare step by step. Step 1. Find cost of direct materials used. Opening stock of materials is equal to 10,000 rupees. Purchases of materials is equal to 60,000 rupees. Closing stock is equal to 15,000 rupees. Materials used is equal to 55,000 rupees. Step 2. Add direct labor, wages. Direct wages is equal to 20,000 rupees. Prime cost is equal to materials used plus direct wages is equal to 55,000 rupees plus 20,000 rupees is equal to 75,000 rupees. Step 3. Add factory overheads. Indirect factory expenses is equal to 50% of direct wages is equal to 50% of 20,000 rupees is equal to 10,000 rupees. Factory cost, works cost is equal to prime cost plus factory overheads is equal to 75,000 rupees plus 10,000 rupees is equal to 85,000 rupees. Important note. Carriage outwards, 16,000 rupees is a selling expense, not a factory expense, so we don't include it in factory cost. Easy to remember. Factory cost stops at the factory gate, selling costs come later. Final answer. Factory cost is equal to 85,000 rupees. Next important short question is: 4. How much of profit, if any, would you allow to be considered in the following case? Contract cost 2,80,000 rupees, contract value 5 lakhs rupees, cash received 2,70,000 rupees, uncertified work 30,000 rupees. Deduction from bills by way of security 10%. Profit to be considered step by step. Let's understand this using clear steps. Given data. Contract cost is equal to 2,80,000 rupees. Contract value is equal to 5 lakhs rupees. Cash received is equal to 2,70,000 rupees. Uncertified work is equal to 30,000 rupees. Security deduction is equal to 10% from bills. Step 1. Find value of work certified. Since 10% is deducted as security, cash received is equal to 90% of work certified. So, work certified is equal to 2,70,000 rupees divided by 0.9 is equal to 3 lakhs rupees. Step 2. Find total work done. Work certified 3 lakhs rupees plus uncertified work 30,000 rupees. Total work done is equal to 3 lakhs 30,000 rupees. Step 3. Find notional profit. Is equal to total work done, contract cost. Is equal to 3 lakhs 30,000 rupees to 2 lakhs 80,000 rupees is equal to 50,000 rupees. Step 4. Calculate profit to be taken to P&L. Cash received work certified is equal to 2,70,000 / 3 lakhs is equal to 90%. Since the work is about 60-90% complete, profit to take is equal to 2/3 times notional profit times cash received work certified is equal to 2/3 times 50,000 times 2,70,000 / 3 lakhs is equal to 2/3 times 50,000 times 0.9 is equal to 30,000 rupees. Profit to be considered is equal to 30,000 rupees. Easy to remember. If work's half done, take half the fun. If nearly done, take 2/3 one. Next important short question is: 5. Write about fixed overheads, variable overheads, and semi-variable overheads. Give suitable examples. Fixed, variable, and semi-variable overheads. In every business, some expenses stay the same, some change, and some partly change with production. These are called overheads. 1. Fixed overheads. These remain constant even if production increases or decreases. Example, factory rent 10,000 rupee per month, same cost whether 100 or 1,000 units are made. Tip: fixed is equal to stays fixed. 2. Variable overheads. These change directly with output. Example, power cost 2 rupee per unit made. More units is equal to more power used. Tip: variable varies with volume. 3. Semi-variable overheads. These have both fixed and variable parts. Example, telephone bill, fixed monthly rent 500 rupees plus 1 rupee per extra call. In short, type behavior example. Fixed no change with output rent salaries. Variable changes fully power materials. Semi-variable partly changes telephone maintenance. Easy to remember. F fixed, V varies, S sometimes both. Next unit 4. Long questions. First important problem is: Mr. Raju furnishes the following data relating to the manufacture of B standard product for the month of May 2019. You are required to prepare a cost sheet from the above showing I. Cost per unit, 2. Profit per unit sold and profit for the period. Question recap. We have raw materials is equal to 30,000 rupees. Direct labor is equal to 18,000 rupees. Machine hours is equal to 900. Machine hour rate is equal to 5 rupees. Administrative overheads is equal to 20% on works cost. Selling overheads is equal to 1 rupee per unit. Units produced is equal to 17,100. Units sold is equal to 16,000 at 8 rupee per unit. We must find 1. Cost per unit, 2. Profit per unit and total profit. Step 1. Prime cost. Prime cost means all direct costs, material plus labor. So, direct materials is equal to 30,000 rupees. Direct labor is equal to 18,000 rupees. Prime cost is equal to 48,000 rupees. Remember, prime is equal to main, the direct cost of making the product. Step 2. Factory, works, overheads. Factory expenses are indirect costs of production. Given machine hour rate is equal to 5 rupees and total machine hours is equal to 900. So, works overheads is equal to 900 times 5 rupees is equal to 4,500 rupees. Works cost is equal to prime cost plus factory overheads is equal to 48,000 plus 4,500 is equal to 52,500 rupees. Step 3. Administrative overheads. These are office-related costs, management, supervision, etc. Given is equal to 20% on works cost. Is equal to 20% of 52,500 rupees is equal to 10,500 rupees. Cost of production is equal to works cost plus administrative overheads. Is equal to 52,500 plus 10,500 is equal to 63,000 rupees. Step 4. Cost per unit produced. Is equal to total cost of production divided by units produced. Is equal to 63,000 rupees divided by 17,100 is equal to 3 rupees and 68 paise per unit. Tip: divide total cost by total units, that's your cost per unit. Step 5. Selling overheads. Selling cost is equal to 1 rupee per unit sold. Is equal to 1 rupee times 16,000 is equal to 16,000 rupees. Step 6. Total cost of goods sold. Is equal to cost per unit times units sold plus selling overheads. Is equal to 3 rupees and 68 paise times 16,000 plus 16,000 rupees. Is equal to 58,880 rupees plus 16,000 rupees is equal to 74,880 rupees. Step 7. Sales value. Is equal to selling price times units sold is equal to 8 rupees times 16,000 is equal to 1,28,000 rupees. Step 8. Profit calculation. Is equal to sales. Total cost is equal to 1,28,000 rupees to 74,880 rupees is equal to 53,120 rupees. Profit per unit is equal to 53,120 rupees divided by 16,000 is equal to 3 rupees and 32 paise per unit. Final answers. Cost per unit, 3 rupees and 68 paise. Profit per unit, 3 rupees and 32 paise. Total profit, 53,120 rupees. Quick memory trick. Prime plus works plus office plus selling is equal to total cost. Subtract from sales. Profit you've got. Next important problem is 2. The accounts of a machine manufacturing company disclosed the following information for the 6 months ending 31st December 2021. Given data, for 6 months. Material used is equal to 1,50,000 rupees. Direct wages is equal to 1,20,000 rupees. Factory overheads is equal to 30,000 rupees. Administrative expenses is equal to 15,000 rupees. We need to 1. Prepare a cost sheet. 2. Calculate the price to quote for a machine costing 1,250 rupees, material, plus 750 rupees, wages, to get 20% profit on selling price. Step 1. Calculate total production, prime cost. Prime cost is equal to direct material plus direct labor, is equal to 1,50,000 rupees plus 1,20,000 rupees is equal to 2,70,000 rupees. Tip: prime cost is equal to main direct cost of making the product. Step 2. Add factory, works, overheads. Factory overheads are indirect manufacturing costs, is equal to 30,000 rupees. Works cost is equal to prime cost plus factory overheads, is equal to 2,70,000 rupees plus 30,000 rupees is equal to 3 lakhs rupees. Step 3. Add administrative overheads. Administrative costs are office expenses is equal to 15,000 rupees. Cost of production is equal to works cost plus administrative expenses, is equal to 3 lakhs rupees plus 15,000 rupees is equal to 3 lakhs 15,000 rupees. This is the total cost of all machines produced. Step 4. Find overhead rate. We need overhead rate to calculate for one machine. Total material is equal to 1,50,000 rupees. Total wages is equal to 1,20,000 rupees. Total overheads is equal to factory plus admin is equal to 30,000 rupees plus 15,000 rupees is equal to 45,000 rupees. Overhead percent on prime cost is equal to total overheads divided by prime cost times 100 is equal to 45,000 divided by 2,70,000 times 116.67%. Tip: overheads are spread over cost in percent. Step 5. Calculate cost for one machine. Material is equal to 1,250 rupees. Labor is equal to 750 rupees. Prime cost is equal to 1,250 plus 750 is equal to 2,000 rupees. Add overheads is equal to 16.67% of 2,333 rupees. Cost of machine is equal to 2,000 plus 333 is equal to 2,333 rupees. Step 6. Add profit, 20% on selling price. Let selling price is equal to SP, cost is equal to 2,333 rupees. 20% profit on SP. SP is equal to cost divided by 1 profit percent is equal to 2,333 divided by 1 0.20 is equal to 2,333 divided by 0.8 is equal to 2,916 rupees and 25 paise 2,916 rupees. Price to quote is equal to 2,916 rupees. Step 7. Recap cost sheet, summary. Particulars amount. Direct material 1,50,000. Direct labor 1,20,000. Prime cost 2,70,000. Factory overheads 30,000. Works cost 3 lakhs. Administrative expenses 15,000. Cost of production 3,15,000. For one machine. Cost is equal to 2,333 rupees. Selling price for 20% profit is equal to 2,916 rupees. Easy memory trick. Prime plus factory plus admin is equal to total cost. Divide for one unit, add profit quote price ready. Next important problem is 3. Prepare a cost sheet from the following data. Step 0. Understand the question. We are asked to prepare a cost sheet, which basically shows how much it costs to make a product. We have direct costs, materials, wages, and indirect costs, factory, office, selling. We will divide costs into 1. Prime cost, direct costs. 2. Factory works cost, prime cost plus factory overheads. 3. Cost of production, works cost plus office administrative overheads. 4. Total cost, cost of sales, cost of production plus selling and distribution overheads. Step 1. Calculate prime cost. Prime cost is equal to direct material plus direct labor plus direct expenses, like carriage inwards, indirect materials. Direct material is equal to 70,000 rupees. Direct labor is equal to 85,000 rupees. Indirect materials is equal to 560 rupees. Carriage inwards is equal to 2,000 rupees. Prime cost is equal to 70,000 plus 85,000 plus 560 plus 2,000 is equal to 1,57,560 rupees. Tip: prime cost is equal to main ingredients to make the product. Step 2. Add factory works overheads. Factory overheads include indirect costs related to manufacturing. Factory rent is equal to 2,400 rupees. Power is equal to 4,600 rupees. Depreciation on plant and machinery is equal to 1,240 rupees. Repairs of plant and machinery is equal to 1,200 rupees. Factory manager's salary is equal to 18,000 rupees. Factory overheads is equal to 2,400 plus 4,600 plus 1,240 plus 1,200 plus 18,000 is equal to 27,440 rupees. Works cost is equal to prime cost plus factory overheads is equal to 1,57,560 plus 27,440 is equal to 1,85,000 rupees. Step 3. Add administrative office overheads. These are office-related expenses. General manager's salary is equal to 36,000 rupees. Depreciation on furniture is equal to 160 rupees. Printing and stationery is equal to 620 rupees. Legal expenses is equal to 350 rupees. Audit fees is equal to 350 rupees. Postage is equal to 465 rupees. Office admin overheads is equal to 36,000 plus 160 plus 620 plus 350 plus 350 plus 465 is equal to 37,945 rupees. Cost of production is equal to works cost plus admin expenses is equal to 1,85,000 plus 37,945 is equal to 2,22,945 rupees. Step 4. Add selling and distribution expenses. Carriage outwards is equal to 1,540 rupees. Salesman's expenses is equal to 3,400 rupees. Advertising is equal to 500 rupees. Bad debts is equal to 440 rupees. Selling and distribution expenses is equal to 1,540 plus 3,400 plus 500 plus 440 is equal to 5,880 rupees. Total cost of sales is equal to cost of production plus selling expenses is equal to 2,22,945 plus 5,880 is equal to 2,28,825 rupees. Step 5. Prepare summary table, cost sheet. Particulars amount. Prime cost 1,57,560. Factory overheads 27,440. Works cost 1,85,000. Administrative expenses 37,945. Cost of production 2,22,945. Selling and distribution expenses 5,880. Total cost of sales 2,28,825. Memory tip. Prime is equal to main stuff plus factory is equal to works cost plus office is equal to production plus selling is equal to final cost. Next important problem is 4. Following information has been extracted from the costing records of Excel Engineering Works, Hyderabad in respect of job number 150. You are required to calculate the price to be charged so as to give a profit of 20% on selling price. Step 0. Understand the question. We are asked to calculate the price to charge for a job so that we earn 20% profit on selling price. We have materials cost, wages in 3 departments, variable overheads for each department, fixed overheads, profit percent. We will calculate total cost first, then selling price. Step 1. Calculate direct wages. Wages are calculated by multiplying hours times rate. Department A, 80 times 4 is equal to 320 rupees. Department B, 70 times 3 is equal to 210 rupees. Department C, 50 times 5 is equal to 250 rupees. Total wages is equal to 320 plus 210 plus 250 is equal to 780 rupees. Tip: wages are always hours worked times rate per hour. Step 2. Calculate variable overheads. Variable overheads are applied based on labor hours. Department A, 8,000 divided by 8,000 hours times 80 hours is equal to 80 rupees. Department B, 4,000 divided by 2,000 hours times 70 hours is equal to 140 rupees. Department C, 2,000 divided by 1,000 hours times 50 hours is equal to 100 rupees. Total variable overheads is equal to 80 plus 140 plus 100 is equal to 320 rupees. Tip: variable per hour is equal to total or divided by total hours. Step 3. Calculate fixed overheads. Fixed overheads are applied based on normal working hours, 9,000. Fixed or rate per hour is equal to 9,000 divided by 9,000 is equal to 1 rupee per hour. Total hours for the job is equal to 80 plus 70 plus 50 equals 200 hours. Fixed off for job is equal to 200 times 1 is equal to 200 rupees. Step 4. Total cost of job. Total cost is equal to materials plus wages plus variable off plus fixed off. Materials is equal to 4,000 rupees. Wages is equal to 780 rupees. Variable off is equal to 320 rupees. Fixed off is equal to 200 rupees. Total cost is equal to 4,000 plus 780 plus 320 plus 200 is equal to 5,300 rupees. Step 5. Add profit, 20% on selling price. Let selling price is equal to SP. Formula: SP is equal to cost divided by 1 profit percent. Profit is equal to 20% on SP. SP is equal to 5,300 divided by 1, 0.2 is equal to 5,300 divided by 0.8 is equal to 6,625 rupees. Step 6. Answer. Price to charge for job number 150 is equal to 6,625 rupees. Memory tip. 1. Add materials plus wages plus variable off plus fixed off is equal to total cost. 2. Profit on selling price divide by 1 profit percent. Next important problem is 5. A work order for 500 units of a commodity has to pass through 4 different machines of which the machine R rate are. Find out the selling price of a unit of commodity ready for sale. Step 0. Understand the question. We are asked to calculate the selling price per unit for 500 units. We have material cost is equal to 20,000 rupees. Wages is equal to 1,500 rupees. Machine R rates and hours. Office overheads is equal to 40% of works cost increased by 60%. Profit is equal to 20% on selling price. We will calculate works cost total cost selling price per unit. Step 1. Calculate machine charges. Machine charges is equal to machine hours times machine R rate. Machine I, 200 times 1.25 is equal to 250 rupees. Machine 2, 300 times 3.00 is equal to 900 rupees. Machine 3, 240 times 4.00 is equal to 960 rupees. Machine 4, 100 times 2.50 is equal to 250 rupees. Total machine charges is equal to 250 plus 900 plus 960 plus 250 is equal to 2,360 rupees. Tip: always multiply hours times rate for each machine. Step 2. Calculate works cost. Works cost is equal to materials plus wages plus machine charges. Materials is equal to 20,000. Wages is equal to 1,500. Machine charges is equal to 2,360. Works cost is equal to 20,000 plus 1,500 plus 2,360 is equal to 23,860 rupees. Step 3. Calculate office overheads. Office overheads used to be 40% of works cost increased by 60%. 1. Old O is equal to 40% of 23,860 is equal to 0.4 times 23,860 is equal to 9,544 rupees. 2. Increased by 60%, 9,544 times 1.6 is equal to 15,270 rupees and 40 paise 15,270 rupees. Step 4. Calculate total cost. Total cost is equal to works cost plus office overheads. Works cost is equal to 23,860. Office O is equal to 15,270. Total cost is equal to 23,860 plus 15,270 is equal to 39,130 rupees. Step 5. Add profit, 20% on selling price. Let selling price is equal to SP. Profit is equal to 20% of SP. SP is equal to total cost divided by 0.2. SP is equal to 39,130 divided by 0.8 is equal to 48,912 rupees and 50 paise. Step 6. Selling price per unit. Total units is equal to 500. Price per unit is equal to 48,912.50 divided by 597 rupees and 83 paise. Step 7. Answer. Selling price per unit is equal to 97 rupees and 83 paise. Memory tip. 1. Machine charges is equal to hours times rate. 2. Works cost is equal to materials plus wages plus machine charges. 3. Office O is equal to percent of works cost times increase factor. 4. Total cost is equal to works cost plus office O. 5. Selling price is equal to total cost divided by 1 profit percent. 6. Price per unit is equal to selling price divided by units.